Hey there, everybody. Thomas with Basecamp Trading. It is Thursday, October 11th, and we're going to take a look really quick here at the S&P and a setup we had been following here at Basecamp Trading that we talked about. For those of you that are members here, we had the end-of-day video 2 days ago talking about this bear flag on the dailies, setting up for this great big down move we had yesterday that followed through very, very nicely. So what we were watching here is the same setup we watch for a lot of times in different markets, just on a longer time frame. And that is, we came out for this bearish divergence up at the top. You can see we went equally high prices, but we had weakening momentum indicator line and histograms on the MQ momentum indicator. We started to sell off from there. We had this nice big lead up, and then we set up a bear flag, and the bear flag was this right here. And we said if we broke through Tuesday's low on Wednesday, that we would look for that bear flag to have triggered and look for the acceleration to the downside. Well, we obviously broke through Tuesday's low Wednesday, fell through the floor, and now we're just kind of stalling down at the lows here. But the thing I want to point out about this is there's actually potential for a lot more downside here. And the reason we say that is, just like we were just looking at that bearish divergence at the top on the dailies, if you go out and you look at your monthlies and look at where we are on a monthly basis, we're way up here and we have a monthly bearish divergence. Okay, so you can see we've gone higher high prices with lower high momentum. Okay, and last month we had the reversal doji. This month it's triggered the aggressive entry. So I would not be surprised at all to see the S&P pulling all the way back down to around the 2542 level. The last time we had a monthly bearish divergence like this was right back here. And you can see where we ended up dropping down very nicely for a couple of months in a row. Okay, now remember, a bear market doesn't just come out of nowhere and all of a sudden, boom, you're in a downtrend. This is 2008 back here, and you can see we actually had the bearish divergence on 2008 on the monthly basis as well, where you have high number 1, and then you go and you look at high number 2, weakening momentum between the two peaks, and we came down, and you can see it just kind of works its way lower. You break down to a lower low, and then you put in the lower high, and then you run down. Same thing with the 2000 correction in the S&P. If you look back here, you had a bearish divergence, then we changed trend, and we just trended down for a year or two. So keep an eye out for that. If this is going to have a bigger down move, it's setting up correctly with the divergence, and we need to see it break through the previous pivot low and then start to trend down. And once that happens, we can look for this to have a bigger, much larger down move coming into a potential bear market. So not there yet, but it has potential. Just needs to continue to develop. So that's it for today. I will see you in the next one. Don't forget to like and subscribe if you're enjoying these videos. And also, if you want to join the membership, there's a $7 trial right there, down there in the link. There's a link in the description. $7 for an entire month. Come check it out. So that's it for today. See you in the next one. And until next time, everybody, happy trading.